All right, well, let's welcome in Trideep Bhattacharya, President and Chief Investment Officer, Equities at Edelweiss Mutual Fund. He's with us here in our studios. Trideep, good to see you.
Good to see you in
person.
Thanks for having me here.
So, how are you feeling about the market and in stock picking? And I mean, what have you been doing? Give us a sense through the course of this year.
I think if I were to summarize the market today, it will be receding macro uncertainty, earnings still uncertain. But at this point in time, I would say that expectations are reasonably benign. So a combination of all of these three is what we are seeing market, where I think
which is the first one? Receding macro uncertainty.
Yeah. So I think with the Trump, whatever he says today or in a week's time, we are almost ending a year and a half of macro uncertainty, starting with Indian elections, its impact on earnings, and now Trump and his impact on earnings. And after this, as we move on, the earnings start to take precedence. It will take some time to adjust, which is why I called out uncertain earnings, particularly in this result season. But if you give it 1 or 2 quarters, I think earnings will also start to come back. Net in FY25, putting all of these together in numbers, we started off with expecting roughly about 15% growth in earnings. We're going to end up being practically flat. So almost about 12-13% cut in earnings. And as we head into FY26, by the time we end it, I think we should touch double digits. So it's basically an earnings reset, summarizing macro uncertainty and gradually making a comeback. So that will be my summary of how I read the situation right now.
All right. Hi, Trideep. Good to have you in the studio. But do you think the street is prepared to look through a weak showing in Q4 earnings? Because it's not going to be great. However, the commentary could be very, very good. And the low base effect will play out from there on, Q1, Q2 as well. So looking through Q4, that's par for the course. That's okay?
I think it gets very company specific from here. Like you read out some of the stock specific movements. If it is within a range, would be probably taken okay.
Yeah.
But if it kind of beats or misses beyond a particular 5% range, would be kind of I think you would see severe reaction onto that. I still think that market this result season will miss the gunpowder of earnings.
Okay.
Earnings upgrades, which you've sort of lost our mojo from roughly about September quarter onwards. I see that coming back maybe June or September quarter this year. Till that point in time, we might get into a bit of a time correction, get of a flattish market where we have to kind of live on stock picking to kind of outperform the markets. And from there on, we start to take off, would be my read.
All right. So you say the street is prepared, that Q4, no great shakes.
Yeah.
Since there's so much of uncertainty with regard to Trump's tariffs, or call it tamasha, whichever way you like to term it, let's talk about domestic-facing themes.
Yeah.
The real estate space is something that you've liked in the past.
Yeah.
Both the core real estate players as well as the ancillaries.
Yeah.
Do you think that theme is good for more?
I think, first of all, it has done quite well over the last couple of years. And I think we are in the twilight zone where the second part of real estate, which is the ancillary sectors, like, for instance, building materials, which haven't done well at all, they might actually see a bit of a time in the day over the next couple of years.
Right.
So I think real estate builders is what you probably talk about as the primary beneficiaries of real estate theme, have played out more or less. There's some more remaining to come. But I think where valuations are reasonable are in the building material space, which should pick up over the next couple of years, is where I have my eyes on.
Okay, that's quite interesting. Let me actually build on that, Trideep. So a combination of reasonable value and reasonable growth. One pocket you've identified, building material, allied real estate plays. What else?
I would say that there are pockets within quite a lot of sectors where there is value. So, for example, within financials, there is NBFCs, reasonable valuations, decent growth, and particularly if the regulation eases out a bit, they would stand to benefit from the same. I would say probably chemicals. They are making a comeback after 4 or 5 years of hiatus.
But isn't that still very risky? Because it's a fully globally, facing, globally linked sector.
It is.
Supply chains, etc., with so much going on. Would you still bat for chemicals?
Tactically, but because there is a price shortage, which is kind of, which is leading to buoyant prices, which will benefit the sector.
And which kinds? I mean, it's a very large basket without getting into names, but generally, I mean, are you looking at pharma intermediaries, or would you be looking at the whole fluorine chemistry part of it? Any particular?
Chemistry mostly.
Fluorine chemistry, got it.
And whatnot. And thirdly, power. I think within subsegments of power, where companies can have a bit of a moat and make margins, I think that's the place to be. So those would be 3 subsectors, not big sectors, where I think money could be made in the next year or so.
So pharma, NBFCs, and select chemicals.
Yeah.
Got it.
Any names in pharma? I mean, just for educational purposes.
We'll keep the education out. We'll limit to sectors. But I think one of the other things which I do see in the market happening is basically shifting profit pools. I think what's happening is there is competition coming in almost every sector from different directions, which will take supernormal profits out. So I think the other way to slice and dice your question is over the next 1 or 2 years, the execution kings within the sector would actually stand to do significantly better than others. Because as outsiders try to want a share of the profit pool, and I mean, of late, we saw in wire and cables, the pharma sector with the GLP-1, and many different kind of, such incidents. I haven't seen in my last 25 years in one go so many sectors impacted by disruptive forces at a time. So interesting time ahead.
What about the telecom space? Suddenly we're going to be getting used to a 3-player market. I mean, the third one's going to survive. The government of India is now the largest stakeholder in there. What do you make of that? I mean, will you look at the one that could survive, the core telecom player, or the other large conglomerate?
Quite frankly, having done a bit of global investing, telecom has not been a great place for investors, a bit like airlines, as Buffett would say. So within this, I think there is one large incumbent which will stand to benefit from that, maybe slightly higher competition in the near term. But on net balance, what's happening is really kicking the can down the road. I don't think it's a solution to the problem of the troubled entity that you're talking about. On net balance, I think the incumbent player should stand to benefit from the same.
The core player.
Yeah, core player.
Okay, all right. Since you spoke about aviation, there's one core play over here. And Interglobe Aviation has seen a big run. You have crude oil prices that are benign, which is good for them. Yeah. And I was just doing a rough check the next few months as well. Airline fares are going through the roof.
Yeah.
Do you think that's going to hold them in good stead? It's already had a big run. It had a dip when you had a couple of entities selling. But those dips are getting bought into. There's plenty of appetite.
Yeah.
Your view?
So my sense is that luxury, and this is, of course, there is a value end to it, but luxury, travel, leisure, hotels, these are the place to be in the next couple of years overall.
Good for more even from here?
Good for more even from here. Because I think if you look at even the hotel sector, for instance, people expected the prices to peak out a couple of years ago, but actually, if you see today, even them they are kind of rising as we speak and have further room to go.
Yes.
So I think net hotels, hospitals, less so aviation, I must admit, are places where I think a few other pockets where structurally money could be made over the next 2 or 3 years.
And you're not too uncomfortable with the valuations there? I mean, especially after this correction now?
Yeah, so valuations have become reasonable. They will not be die-hard cheap because obviously there is economic momentum in there. You've got to pick your spots, but within that, yes, I am comfortable with a few names. We hold it in our portfolios.
I completely agree with hospitals. Hotels, I don't know. Hospitals, I agree with. I mean, hotels also, they've done well. Why not, right? But hospitals... See,
you have to go to one place by force. The other you go by choice. But eventually you have to sort of deal with both.
A friend of mine was saying instead of buying insurance policies, obviously it's not serious. I was just joking. Might as well buy stocks, right? I mean, you'll healthcare costs rise, 10, 15, 20% every year?
Yeah, oh, it's huge.
And you got
the premiums have been shooting higher.
Maybe some appreciation in stocks as well, which takes care of the cost. But of course, as I said, buy your healthcare insurance policies, absolutely. But what else, Trideep? You're not sounding, it's sounding, you said interesting times ahead. Sounded to me like tough times ahead, Trideep.
I think for it's old school bottom-up stock picking time ahead. Basically, that's what I mean. The easy answers, the big themes, the manufacturing themes that get played out,
done, dusted.
Those are kind of are themes of yesterday. Going forward, and as I said, the profit pool are shifting within the sector. So which spot you pick within the sector is important. And then a couple of shades, where a little bit of momentum is there from a sectoral theme standpoint. So it's basically die-hard stock picking, and hence I am sounding a little kind of, the easy pickings are done. It's hard work ahead.
The rising tide is now flattened.
Correct.
There's no.
He's actually sounding a little optimistic to me because he's brimming with ideas. And like you're saying, this is, I think, is going to be the period that will separate the men from the boys in terms of fund managers. So very interesting times ahead. Having said that, just a quick final question from my end. So the general wisdom in the market, if you ask, I mean, 8 out of 10 people will still tell you that don't go to mid caps, large caps is the way to go, etc., etc. But let's face it, I mean, we need some mid caps in our portfolios as well. Now, there, what is the approach? Where do you see still too much of over exuberance? Where, which are the interesting mid cap opportunities?
So I think first, I must admit that when I look at a business for stock picking perspective, it's very unlikely that I look at large, mid or small. We look at the quality of the business, the moat that it has and the growth prospects and whatnot. And in that context, in some of the subsectors that I mentioned, the largest companies are actually mid-caps.
Mid-caps, yeah.
So, and you could call them mid-caps and hence higher exposure to mid-caps. But overall, I think, as I said, there are certain segments within mid-cap domain which are hardly there in a large cap. For example, if you look at hotels, hospitals, and
even chemical companies, it's all mid-caps.
Chemicals or capital markets. These are not part of large caps at all. So for you to hunt in these spaces, you've got to kind of dig deep down as well. And I think that's where I was meaning that one has to deep dive to get to those pockets where there is value, and hopefully kind of, we can tide this period through. So
without
that's
the
my
tide.
recipe.
Tide this period through without the tide.
Without getting swept away.
No, I mean, but yeah, it's. I think Sanjeev Prasad was with us yesterday, and he was also making the similar. I mean, the competition is a. We don't talk about it too much, right? We talk about companies and what they can do, but so many sectors seeing disruption, extra competition, etc. So. Have to take note of all of that. Thank you very much, Trideep. Appreciate your time here.
Pleasure.
And thank you for dropping by
to the
studios. I think.